What's up, everyone? Excited to use a video today about Snapchat, which just broke out on the chart and really does look prime for a lot of upside over the coming weeks. So in this video, I'm going to be covering the chart. I'll go into short interest. I'll go into some daily average users numbers that we got from the stock. I'll jump into the financials as well for shares. So with that being said, this is not financial advice. Let's jump right in. So we can see Snapchat broke above this $12.80 level, which is where shares had topped out in March. It's also where shares had topped out in February and September as well. So definitely a crucial level of resistance that has now been broken, which I do believe will help lead to more upside for the stock. So obviously we're above all daily moving averages, which is a good sign in terms of momentum. And after we have broken this level, I do believe we get a move higher, but I think, some sideways trading here could help the stock. It could be like a little bit of a healthy consolidation moment within a larger uptrend. I think that would be very healthy for the stock, as currently RSI is overbought. And as you can see here, RSI being overbought has led to some declines in the stock in the past. We can see it back in January and, a couple other times as well. So I do believe now that we're above this level, we see a move higher for Snapchat, likely up to about $16. And I picked $16 as my target because that is where shares had topped out in July and June of 2022. So therefore, I believe we likely move up to this resistance level at about $16 over the coming weeks. So that is my price prediction for Snapchat. And with that being said, I'll take a look at some seasonality trends. So this screen right here shows me which months the stock typically does good in, which months the stock typically does poorly in. You can see here July, seasonality wise, is a bearish month. So on average, the stock is down 4% for July. So not the end all be all there, but I always do like to cover that, anecdotal information. Let's take a look at short interest though. So we can see here that 6% of the float is sold short, which equals out to a 2.4 days to cover. For those that don't know, 2.4 days to cover basically means that it takes 2.4 days of average volume to cover the shares that are sold short on the stock. So this really is a pretty low number, to be honest. 2.4 doesn't really signify a likelihood of a short squeeze, and that's because typically when we're looking at the stock and we're trying to determine if it's going to have a short squeeze, we look for a number of at least 10 or more. So 2.4 here, not really the best number. I would give this kind of a D minus in terms of a short squeeze likelihood, just because the short squeeze data just simply does not support that thesis. So with that being said, let's take a look at just some of the fundamentals of the stock. So Snapchat Plus subscribers jumped to 4 million recently, which is definitely a good sign to see that we're increasing that revenue stream. Also, governments are blocking TikTok, which has helped Snapchat's growth for sure, and really will help all U.S.-based social media stocks, Pinterest, Meta. So that's definitely a growth driver for shares. We're seeing a massive social media engine, kind of be pushed out of America, even if it's just socially at this point. And I think, coming down the pike, we'll probably get some larger, more comprehensive restrictions put on TikTok, which will only drive users to Snapchat and other short form content. So, and then when we take a look at the daily active users, we can see that we've been on a pretty good run over the past year. So we've had daily active users jump 15%, which is pretty good. Definitely something you'd love to see. And then, but to be fair, a lot of these users aren't in North America. We've only seen a 3% jump in North America. It's really been the gain really has been through the rest of the world, even outside of Europe. So worth noting there. But overall, awesome to see a 15% jump in daily active users for the past year. I think that's very important. And then, so we've seen some volatility within the ad market. Ultimately, the ad market should rebound though. Analysts only forecast revenue growth rebounds to 15% in the years ahead, but Snap has been growing DAUs at 15%, suggesting that revenue estimates are far too conservative. The social media messaging company has a host of catalysts that would drive growth back to 30-40% range outside prior growth. The stock only trades at a 3.6 those conservative 2024 revenue targets. So only 3.6 times revenue targets of 2024. So definitely seems like the stock has some fundamental upside. Like I said, the main point in this is that daily active users have been growing at a steady clip, which is great to see. With that being said, let's take a look at some financials. So we can see here that the stock trades at 180 times PE, and that's forward PE. So for the next 12 months, the company's expecting to, have 180 times PE. Obviously, the company doesn't make any money currently, and this is well above the sector median, obviously. And then EV to sales is 4.5, which is well above the sector median as well. Price to book ratio is 7.8, which is well above the sector median, but is below Snapchat's 5-year average. So for those that don't know, basically the lower this number is, the better. So on average, Snapchat has a 15 price to book ratio. So being at 7 isn't that bad when you consider Snap's history. For those that don't know, price to book ratio just basically puts the market cap relative to the book value of shares. So this basically tells you that the market cap is 7.8 times the value of the book value of the company. So not a horrible number, but definitely I wouldn't say a number to kind of ride home about. So year-over-year revenue growth is 2.6%, which is well below Snapchat's 5-year average of 44%. So we're definitely seeing growth kind of taper off here. But what I do love to see is that revenue growth for the next 12 months is at 8.2%. So we're seeing that growth trend, that growth declining trend kind of reverse here. And these numbers, the forward growth number is well above the sector median as well. CapEx growth at 94%, basically just tells you what the company is doing in terms of investing in future growth endeavors. So good to see that the company is in full-on growth mode at this point in time. And then free cash flow per share up 13%, which is well above the sector median at 3%. So overall, over the past 12 months, things haven't looked so great for Snapchat. But when we look at these forward numbers, things do look pretty positive for the stock. And then let's take a look at some profitability numbers here. So gross profit margin is at 59%, and gross profit basically just tells you what you make on what you sell. So it's revenue minus cost of goods sold. For those that aren't aware of what this means, this is kind of just like tells you once they sell a product, they make 59% on that product. So it doesn't encapsulate all of the other costs of running a business. But it shows you that as long as we're able to get growth in the stock, the company sells something that is very profitable. So it's just a matter of, how much are they selling? So with growth, you can definitely see how Snapchat could become very profitable. And then let's take a look at cash per share. So we have basically $1 in cash per share, which is about 8% of the market cap right now in cash per share, which is definitely very healthy and kind of implies some safety for the stock. So overall, this gross profit margin is a very healthy one, and I do believe signals bullish financials, bullish fundamentals for the stock, and really more than anything, it signals that once growth is able to catch up, we'll be moving towards profitability for Snapchat, pretty quickly. And then I'll do one last screen here. So I want to compare Snapchat to its close peers, so Pinterest, Meta, Match Group. Let's take a look. We can see here that Snapchat has been underperforming Meta and Pins over the past couple months, but I do believe this outperformance, this underperformance, could kind of turn around here. Like I said, we just broke a major resistance level. I think that could kind of help shares. But let's take a look at PE. So over the next 12 months, PE is expected to be at 180 for Snapchat, as I explained. And then PE for Pins, though, is at 35 times, which isn't the worst number, but isn't the best either. And then Meta at 25 times, and then Match Group at 17. So these numbers, obviously Snapchat is trading at a premium to the peers, but you could make an argument that Snapchat is way earlier innings than Pinterest and Meta. So obviously more growth potential long term. Although when we look at the shorter term growth numbers, like year-over-year growth, we can see that Snapchat has been lagging the peers. Although Meta's growth was negative year-over-year, and Pins was about 6. But we can see if we look like 3 years out, Snapchat has the best growth numbers by a good margin. So only 2% on Pins, but we're almost double Meta's growth and doubling Match's growth. So definitely seeing Snapchat show that long-term growth trend that we want to see for that stock. And then gross profit margins are solid for Snap, but they actually rank out pretty poorly when you compare them to the peers, which obviously is not a great sign. But there's other things to like about Snap. And then short interest is at 6%, which actually is the highest amongst all the peers. And then let's take a look at some cash. So we can see that Snapchat has basically $4 billion in cash, which when you compare it to debt, looks pretty bad. They're basically in a situation where they either need to issue more debt, or issue equity, because they're basically trading, their debt is basically trading in parity with their cash. So, to kind of keep funding operations, because they are making money, they're going to have to do one of the two things. Like I said, either issue new debt or issue equity. And given the equity markets has been so strong, and rates have really risen, which makes it less advantageous to issue debt, I think the company likely issues equity. But we'll see how that plays out. And then you can see here for Pins, right? Pins actually has $2.7 billion in cash compared to $159 million in debt. So definitely, two different stories here from Pin and Snap, right? Pins has a massive cash holding that really signals the company has a strong ability to fund future operations. And then for Meta has $37 billion in cash and $28 billion in debt. And then Match Group's in a really bad spot, has $500 million in cash and almost $4 billion in debt, which really puts them under the gun for issuing new debt or issuing equity. So that is the comparison for Snap to the peers. I'll cover one last thing before I let you go here. So we can see that earnings revisions, so as this loads, earnings revisions have come down significantly. And what I mean by that is, I should say earnings expectations have come down significantly. So 22 different analysts have brought down their EPS expectations, and 35 different analysts have brought down their revenue expectations. So what does this mean? This tells you that Wall Street is becoming more and more bearish on shares. For those that don't know, analysts basically cover stocks and make predictions on EPS and revenue based on company-specific news, general stock market news on the consumer. So analysts who get paid lots and lots of money to predict these things tend to be pretty right. So I think this kind of general consensus of bearishness for earnings really just shows that the ad market has fallen off a cliff, and that's likely the reasoning for almost all of these downward revisions. So really, it's this is more about the general ad market than it is about Snap. So don't beat up Snap too much for these numbers, as really just ad spend in general has been pretty weak. So with that being said, to summarize it, I do like Snap's profitability numbers. Growth numbers are improving. Valuation leaves some room for improvement. And then obviously daily active users had a 15% jump for the year, which I think is great. And Snapchat just broke a major resistance level at about $12.80, which I do believe could lead to a larger move higher for this social media stock over the coming months. So with that being said, I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.